Right cuts while altcoins rallied, demonstrating renewed speculative rotation. ETFs products continued to experience redemptions, constraining broader upside and reflecting cautious institutional positioning. Traders are watching key technical levels and liquidity zones for potential support and breakout triggers. Despite selling pressure, market participants sense a tentative stabilization in risk appetite. Momentum diverged across digital assets, signaling selective capital flows rather than uniform moves. Ethereum ETFs posted record one-day outflows, signaling investor caution and possible rotation into other digital asset categories. This prompted noticeable drawdowns in ETH price, which declined by over 1% amid broader crypto weakness. Spot ETF inflows into Ether remained tepid, and short sellers stepped up during intraday volatility. Despite this, some investors remain optimistic about regulatory clarity, eventually allowing resumed accumulation. Analysts highlight this outflow as a short-term liquidity drain with longer-term implications. Essentially, all major cryptocurrencies recorded weekly losses. Bitcoin, Ethereum, and XRP fell between 3.3% and 10.3% against a backdrop of macroeconomic uncertainty and hedge fund deleveraging. Volatility across digital assets surged, driven by speculative unwind. The altcoin sector showed particularly steep drops as correlated risk aversion intensified. Traders interpreted this as a rotation out of high beta tokens and into more stable holdings. Liquidations cascades continue pressuring open interest and funding rates. XRP price declined roughly 4%, reversing earlier intra-week gains amid broader market weakness. Analysts warn of further downside risk as bearish on-chain signals and clustering technical indicators suggest potential deeper pullback. Some predict XRP could test lower support zones near $2.70, depending on continued weakness in broader crypto sentiment. Despite recent institutional custody support in Asia, price action remains fragile. Market watchers remain wary of opportunistic short positioning ahead of clarity.
Meanwhile, BNB slipped below 750 support level amid market-wide sell-off, though buyers managed to hold short-term support at that threshold. Relative strength metrics show BNB underperforming compared to broader altcoin sentiment. The drop reflects tight trading range and reaction to ETF redemptions across U.S. exchanges. BNB holders are closely monitoring regulatory developments impacting Binance's oversight internationally. Price action remains quiet, but technically precarious in a cooling trading environment. Solana, Tone, Sui, and other Layer 1 tokens saw muted gains or minor losses as capital rotated towards select assets. Sui held around $3.40 with modest recovery attempts, whereas Solana remained steady near $164 as corporate demand supported accumulation. Some narrative tokens posted isolated spikes amid community chatter, but overall breadth remained narrow. Analysts highlight potential upside in tokens with strong decentralized exchange activity and future upgrade catalysts. Institutional allocation remains focused on proven infrastructure tokens. Crypto derivatives volumes surged, with Binance futures reaching a 6-month high as traders hedged and adapted to volatility. The rise in options trading suggests increased interest in protection strategies such as collars and straddles. Meanwhile, open interest across major tokens remained elevated despite price drawdowns, indicating ongoing institutional hedging activity. Directional flow weakened in favor of premium capture and volatility-based positioning. Market adaptation continues as structured trading strategies dominate. Broader macro signals heightened stagflation fears after U.S. ISM non-manufacturing PMI fell below expectations, signaling persistent inflation and stagnating services growth. Equity markets reacted critically as trade war concerns resurfaced ahead of new tariff announcements. Markets across Asia and Europe declined on tariff uncertainties affecting corporate guidance. Treasury demand returned, with bond yields retreating modestly on safe haven rotation. These macro conditions amplified caution in both equity and crypto markets. U.S. equity futures rose modestly ahead of the open despite Tuesday's declines, driven by optimism around potential rate cuts and strong earnings from some AI-related firms. Palantir shares jumped 6% following upbeat guidance amid strong AI platform adoption, though AMD posted mixed results. Growth equity sentiment wavered, while small-cap and energy sectors showed resilience. Investors recalibrated exposure amid volatility, retaining selective optimism. Analysts caution that further economic surprises could quickly shift intraday flows. FTSE 100 extended a record run, rising slightly, supported by strong corporate earnings, particularly from insurers and banks, despite weak PMI in construction and rising tariff pressures. Companies like Hiscox posted robust insurance revenue, while Metrobank turned a profit and remained listed in London. Tariff threats and geopolitical tensions weighed on specific sectors, though broad index strength reflected investor confidence in corporate fundamentals. UK markets benefited from standout earnings reports, offsetting economic headwinds. In emerging markets, concerns rose over U.S. tariff threats aimed at India and semiconductors, prompting equity adjustments and trade risk recalibration. Indian markets faced sensitivity, while South Korea weighed potential policy responses. Global capital flows shifted cautiously across Asia, with risk-on sentiment muted. Multinational firms with exposure to trade duties revised forecasts downward accordingly. Emerging economies now face heightened macro vulnerability tied to Western policy shifts. Tesla UK sales dropped nearly 60% year-on-year in July, while Chinese EV maker BYD saw a four-fold increase. Uncertainty around UK electric vehicle subsidies, excluding Tesla models, contributed to the decline. Tesla's regional revenue retreat underscores shifting competitive dynamics. EV sector performance remained mixed, with policy shifts and subsidy changes influencing buyer behavior. These developments highlight broad sector rotation across transport and tech themes.
Additionally, former fund manager Neil Woodford was fined around £46 million and banned from senior roles by the FCA over fund collapse. Investor confidence in fund oversight and regulatory enforcement received a sharp test. Asset managers on both sides of the Atlantic face renewed scrutiny. Corporate governance is back under spotlight, affecting trust dynamics in capital markets. This action reinforces regulatory risk premiums impacting equity valuations. Crypto sector technical outlook remains cautious. Analysts continue warning of a capped BTC rally unless inflation and treasury trends improve. FundStrat's Tom Lee reaffirmed a possible path to 250K BTC in 2025, yet current positioning lacks conviction. Market watchers say echo signals of previous altcoin summer cycles are absent, limiting upside momentum. Structural themes remain intact, but sentiment lags institutional allocation patterns. Indonesia is reportedly evaluating Bitcoin as a national reserve asset to support economic strategy. Such developments reflect growing institutional acceptance in Southeast Asia. If realized, it could catalyze adoption momentum and consolidation of Bitcoin demand. Other nations considering tokenized financial infrastructure may follow suit. Institutional interest in crypto-linked sovereign strategy remains nascent but increasingly pronounced. The Base network suffered a 33-minute outage caused by sequencer failure, temporarily halting block production, a reminder of crypto infrastructure vulnerability. The team later fixed the issue, but reliability concerns resurfaced. Institutional users evaluated contingency strategies for operational resilience. Highlights the importance of tech robustness under higher network demand. Infrastructure continuity remains critical amid growing enterprise adoption. SEC recent guidance indicating that liquid staking tokens may not qualify as securities under certain structures is seen as a regulatory win for DeFi institutions. Analysts suggest this clarity could unlock new institutional products and offerings. Major institutional allocators gain confidence in liquidity staking frameworks. This pivot underscores regulatory evolution, supporting innovation in tokenized asset management. Market participation may widen across compliance-aligned structures. Crypto custody developments continue. Ripple's institutional partnership in Korea expanded XRP support, while SBI filed a Bitcoin XRP ETF in Japan, signaling growing regulated dual-asset exposure. Such activity marks broader institutional infrastructure adoption across Asia. Regulatory alignment boosts token legitimacy and investor accessibility. Cross-border demand dynamics strengthen under clearer frameworks. XRP's corridors deepen amid custody reinforcement. Meme coin category remains inactive. Most tokens posted minor losses or stagnation despite broader market weakness. Only a few niche tokens saw isolated spikes, failing to sustain momentum. Overall market breadth remains narrow. High beta assets saw poor liquidity and low retention. Analysts interpret this as selective interest centered on fundamental and regulated projects. In summary, today's market shows risk-off tone across crypto and equities amid macro headwinds, inflation uncertainty, and regulatory transitions. Institutional rotation favors infrastructure and stable tokens, while speculative sectors lag. Short-term volatility dominates, but long-term structural adoption continues. Investors are advised to stay diversified, hedge carefully, and maintain nimble exit strategies. Opportunity lies in clarity, not in panic.